Good morning, Steve Free in Chicago with the morning grain comments. Grain prices are just a little bit higher overnight, led by wheat. Outside markets still watching tension in Russia and Ukraine, and also watching any Fed action that could start raising rates. There are some economists that feel that despite Fed's goal to raise rates, concerned that the last part of this year's U.S. economy could begin to slow, suggests that they may be handcuffed in that their goal is to raise rates at a time when it looks like the U.S. economy could slow down later this year. We'll also be watching, as far as weather is concerned, down in South America, there has been a pattern change. I think there will be more rains for Argentina, even though they came out and said, despite the rains, 42% of their crop area is still in drought. Yields coming out of southern Brazil, early crops, Paraguay, early bean crops, early corn crops are very disappointing. We had one private group that has offices in Brazil that did a crop tour, and they came back and said that the soybean crop could be below 130 million metric tons, even below 125 million metric tons. We also note that if there is a pattern change in Brazil and more normal rains, that could help the second corn crop. Right now in the U.S., we're competitive as far as buyers of world corn, and it's probably like April forward, we're competitive in beans. So the cash markets is saying there's something going on in South America that could increase the demand for U.S. corn and soybean exports. Our bean export pace is still behind the USDA's goal. Also, corn is a little bit behind the goal, while wheat's right on target with the USDA goal, which is lower than last year's wheat exports. We also note that the markets in Europe are very concerned about what could happen if Ukraine exports of corn and wheat is stopped, and Russia wheat exports are also stopped. The only game left in town as far as if something happens there is U.S. wheat and U.S. corn. We also note that the USDA came out yesterday and lowered crop ratings as far as winter wheat is concerned. The last ratings they had was January 3rd. So Kansas, Oklahoma, Texas, Nebraska, all those wheat ratings are down from the January 3rd and below last year. Forecast continues to be mostly dry in the southern plains. Again, January weather doesn't really impact the crop. The key tends to be March and April rainfall. So the markets are going to be watching pretty closely. Above $14 March beans is kind of positive and somewhat rare for this time of year. 620 corn now suggests a breakout on the upside to maybe 640. And the wheat market back above $8 in Chicago and Kansas City suggests this geopolitical premium could continue, especially if U.S. spring weather is dry. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day. And remember, always treat people like you yourself would like to be treated.